Welcome. In this video you will discover overnight rate, definition, and how it works. Let's go. The overnight rate, commonly referred to as the federal funds rate, is the interest rate at which depository institutions, such as banks and credit unions, lend reserve balances to each other overnight. It is a cornerstone of monetary policy in the United States and plays a critical role in the broader economy by influencing borrowing costs, economic activity, and inflation. The overnight rate is set within a target range by the Federal Reserve, the central banking system of the United States. It represents the cost of short-term borrowing for banks to maintain the required reserves mandated by the Federal Reserve. These reserves are held to ensure the liquidity and stability of the banking system. Now, how does the overnight rate works? Role in the banking system. Banks are required by law to hold a certain percentage of their deposits as reserves. At the end of each business day, some banks may have excess reserves, while others might face shortfalls. To balance these differences, banks lend and borrow reserves from one another in the federal funds market. We have the Federal Reserve's target rate. The Federal Open Market Committee, FOMC, a branch of the Federal Reserve, sets a target range for the overnight rate. The FOMC meets regularly to evaluate economic conditions and adjust this range as needed to achieve specific policy goals, such as promoting maximum employment, stabilizing prices, that is, controlling inflation and ensuring moderate long-term interest rates. Another is open market operations, OMO. The Federal Reserve uses open market operations to steer the effective overnight rate toward the target range. This is achieved by buying securities, which increases the money supply, lowers interest rates, and stimulates borrowing and spending, and also selling securities, which decreases the money supply, raises interest rates, and helps cool down economic activity. Lastly, interest on reserve balances, IORB. The Federal Reserve also influences the overnight rate by paying interest on reserves held by banks. The interest rate on reserve balances, IORB, acts as a floor for the overnight rate, since banks are unlikely to lend at rates lower than what they can earn by holding reserves at the Fed. Let's move to impact of the overnight rate on the economy. The overnight rate is a foundational component of the U.S. financial system, affecting everything from personal loans to corporate financing. I will be explaining its major effects. Impact on other interest rates. Changes in the federal funds rate ripple through the financial system, influencing various interest rates such as prime rate, mortgage rates, auto loan rates, and savings rates. It also affected the monetary policy goals. The Fed adjusts the overnight rate to achieve macroeconomic goals to combat inflation and to stimulate growth. By lowering the rate, borrowing becomes cheaper, encouraging spending and investment. It also had influence on consumer and business behavior. When the overnight rate changes, it impacts consumer and business behavior, rising and falling rates. The last effect is global economic impact. As the US dollar is a global reserve currency, changes in the overnight rate can affect international financial markets. Higher rates often attract foreign capital, strengthening the dollar, while lower rates may lead to a weaker dollar, benefiting US exporters. Are we still following? Measuring and monitoring the overnight rate. The effective federal funds rate, EFFR, is published daily and reflects the weighted average of actual overnight lending transactions. It serves as a barometer for the health of the financial system and the effectiveness of monetary policy. The overnight rate is a critical element of the U.S. economy and monetary policy. By influencing borrowing costs, economic activity, and inflation, it plays a key role in shaping the financial landscape. Understanding its mechanisms and effects provides valuable insights into the broader economic environment and the Federal Reserve's approach to achieving its dual mandate of stable prices and maximum employment. Are we good on this? Thanks for watching. Kindly subscribe to our channel and stay tuned.